I want to point out something here on Tesla. So we're coming off some extended selling going all the way back to July the 20th. Now it's just been lower high after lower high after lower high after lower high. We've lost all short-term levels of support. We're below the 5, 10, 20, 50-day moving average here. So that's never a good thing for the bulls when we're below all of those levels of support. One thing that I kind of want to look at going into next week is we could be in for a little bit of a dead cat bounce. There might be some money to be made on the long side if we take out today's highs. So if Tesla starts to take out 243.55, potentially we push into 245.50, and we could potentially spike a little bit higher than that, maybe to around 249, 250. If you're an aggressive day trader and you can manage your risk well, look for some long positions over today's highs. Now, the bigger trade that's going to come is going to be if we get maybe 1, 2, 3 days worth of consolidation or a little bit of a bounce, and then we lose 237.87. That's going to have room down to 231. That's the bigger trade. Okay. The dead cat bounce, you're going to get either it's going to gap up, you're going to have to chase it. It's going to go up a little bit, come back down, go up a little bit, come back down. It's going to be a little bit more of a trickier play. One thing that I want to point out to you guys, and just so you guys can kind of learn, when we are trading over levels of supply, especially the 5, 10, 20-day moving average, and especially the 50, the moves are more fluid and they last longer to the upside. Okay. When we are below the 50-day moving average, the moves to the upside might be quick and then come back down, or they might kind of drag their feet in the mud all day long and then sell off. Okay. So what I'm trying to get at is that if you're looking to go long on a dead cat bounce next week, because it's possible, right? I would definitely think scalp, get in over today's highs, get green, get out, wait for the short position. What's the short position? 237.87. Just set an alert. Whether it comes on Monday, whether it comes next Thursday, whether it comes in 2 weeks, 237.87 is going to have room down to 230. That's the play that you're going to want to be in. From 237 to 231, 230, that's the play that you want to be in. But again, if we get a little bit of a bounce, that's even better for the short position, because it's just going to make the setup that much more juicy. The last thing that I want to see is Tesla open up at 232 on Monday. There's no meat left on the bone for me there. Then I have to wait now. Then I'm going to really need to wait for some type of bounce. And then we're going to have to close below 231 before I have any type of room left in it. If I look to the left of the chart here, this area is going to act as a previous area of support. So going back to 626, going back to 627, and going all the way back here to 68, you can see the gap up here. Tested it, bounced, chopping around, tested it, bounce, right? So if we bounce, do not be surprised if Tesla's trading at 252, 255, 257 next week. Don't think that the selling is over at that point in time. Tesla's really not out of the woods until it reclaims 262 and closes over that, and then starts to build over that level of supply. Okay, so all of this bouncing that could go on next week, there's going to be money to be made. Make sure you manage your risk accordingly. Make sure you're taking profits a lot quicker. But again, it's just setting up for a potential landslide through 237. So I want us to be prepared on both sides. Okay, again, the charts look like absolute death. Doesn't mean that we just jump short, right? Doesn't mean that we should be swinging everything short, because I'm willing to bet the majority of people who are swinging over the weekend short are going to get trapped and stopped out of their positions between Monday and Tuesday. That's just the way that it's going to work. It's just based on technical analysis. It's right in front of your face. Read the charts and play the charts accordingly. There's no reason to swing overnight. The swing overnight came about 4 or 5 days ago when we lost and we were sitting at the 50-day moving average at 253. We're down 10 points since then. You should have essentially been swinging since Monday, Tuesday, Wednesday, Thursday, Friday. We should have been swinging all the way down. We should not be starting a swing position when we could be looking at a short-term dead cat bounce. I hope this video helps you guys. If you guys want to get access to the strategy, you want to get access to live trading, I'm starting to live stream in the mornings. you know, starting from pre-market and at least for the first hour to 2 hours of the market open, I'm going to be going over levels in real time. I'm going to be calling out, you know, levels that I'm watching, looking to trade, or where potential stop losses are at, or where potential profits are. You can check the last live video on my channel. I kind of got my feet wet with it a little bit today. I enjoy it. It's not too bad. I think that it can help some people. Again, it's not to sit there so you can just take every trade that I'm calling out, or, you know, just because I'm talking about a stock doesn't mean to take the trade. Obviously, I want you guys to be able to do this on your own. So make sure you understand what's going on in the chart before just buying calls or buying puts. That's the last thing anyone needs to do. Again, I'm talking about futures trading in there as well. So that'll be good for everyone who trades futures. Until next time, guys, enjoy your weekend. I hope you guys all had a green week. If you didn't, it's okay. We got another trading day coming up here on Monday. We can get it back plus some. I'll see you guys on the next one.